Good morning, everybody, and welcome to this weekly 10 minutes update. And we wrap up this week with a lot of events that happened during the week, whether from the FX market or even commodities and even equities. To start with, of course, the start of the week was, first of all, gold prices, which posted a new record high above the 2,450, and we reached almost 2,480, 82 or 87. Before we declined, at least during yesterday's trading and during the Asian session today. So far, gold is basically down today on Friday by almost 1%. We're down towards 2,400. So it is very important to keep an eye on the weekly close when it comes to gold, because we did break above the 2,450, but the weekly close below that would basically show a reversal candle on the weekly, and that would might lead to a new correction to the downside in the next few weeks. So that is one of the reasons why basically gold rallied is the comments or the remarks from the former President of the United States, Donald Trump, regarding Taiwan and whether the U.S. has enough reasons to defend it. In addition to that, we had the continuous a change in the market expectations regarding the Federal Reserve policy, which is so far after the this week's data, it is still hovering around 3 rate cuts starting in September and even in November and in December. In addition to that, even markets or Fed fund futures are even pricing in another rate cut in January. With that being said, the markets are still, this is one of the dynamics that we saw during the week, is basically the U.S. equities took another hit, and led by, of course, by tech stocks. At least Dow Jones is now, yesterday we lost another 533. It is still up on the week, because we did add a little bit a few days ago. However, one of the most important data that came out also this week was the jobless claims. Again, it shows more data and more evidence that the U.S. Labor market is actually deteriorating or slowing down. The jobless claims came out much better or much higher than expected, not better than expected. And this is basically continues to show that the labor market is slowing down, and this would continue to support the idea that the Federal Reserve will have to cut sooner than later. NASDAQ, of course, we were down almost by 0.5% yesterday. The day before, we were down almost by 2.5%. S&P, the same thing. We did also close yesterday almost down by 1%. And since the peak last week, so far S&P is down by 2.5%, which is a correction that is needed, a correction that is most probably, we would say, that it might continue for the next few weeks while we wait for the rest of the earnings season. So far, the earnings season is not bad. It is still at the beginning of it. Most of financials earnings were actually good. So there's nothing much really to show that there's a huge slowing down in earnings as of yet. The dollar index basically also we declined all the way till 2 days ago. We declined all the way down to 103.67, but we did recover yesterday after the ECB decision and after some also the U.S. data. The retail sales data came in better than expected this week. However, this still doesn't change the market expectations when it comes to the Federal Reserve rate cut. Earlier this morning, we did recover yesterday's. Or not yesterday's move. We recovered 2 days of losses, and now we're trading around basically 104.23. This is still considered as another upside retracement before the downside trend resumes, because once we broke below that 104 and 105, or specifically 105, this basically continues or deepened the bearish outlook, at least on the short term. In addition to that, we saw multiple interventions last week by the Central Bank of Japan, and there was also some suggestions that basically the Bank of Japan also intervened this week, leading the dollar yen to go all the way down to 155. But this will basically be answered by whenever we see the Bank of Japan accounts on Monday. This will give us the answer. In addition to that, we had also the ECB decision yesterday, and it was came in as expected. There is no rate cut. The bank is not committed to any timeline of the next rate cut. In addition to that, Christine Lagarde said that they are not committed to any path. We can either raise rates if needed, and we can cut rates also if needed at some point in the next few meetings. So markets are still pricing in the possibility for an 80% chance for a rate cut by the ECB in the next meeting. That's one reason why basically the euro declined a little bit below 109 now. We're trading 108.86. We're still hoping that we will get out of the range that we've been in within the past at least 1 year. Yeah, continuing with the British pound was one of also the weakest currencies during yesterday's trading, and we saw basically the decline, and we lost basically the lowest level since the beginning of the week. And this was basically on some remarks from the new government, or the new Labour government, saying that they will have to take tough decisions in order to fix the UK economy problems. So that basically the market took it as kind of like a negative factor, depending on what they will implement over the next few weeks, over the next few months. Now, it is. I mean, the British pound in general is due to a correction in general after the recent rally. We had a very impressive rally. I mean, we did go all the way up towards 130.45, and that was almost 3.4% within a very short period of time of 11 trading days. And this is not something usual for the British pound to do that within the next few, or at least within a few days. In addition to that, we have also the New Zealand dollar, which remains one of the weakest currencies, as we noted also last week, since the New Zealand dollar or the Reserve Bank of New Zealand is not expected to is expected actually to cut rates. Maybe it would be faster than the Federal Reserve, according to the recent decision by the Reserve Bank of New Zealand. There is a very small chance that the Kiwi will be able to rally, even if the Federal Reserve started cutting rates before. So we're talking about a weakest currency, but it might not be as weak as the dollar. The dollar decline is likely to continue until they actually start cutting rates. Silver also it failed multiple times to break above the $31. And now we're back under the $30. Now we're trading 29.35, and the most important level to keep an eye on, and that we will basically most likely traders will be defending, is the 11 years breakout, which is at 28.80, and this is the level that all traders need to keep an eye on, because that would be at some point, if we get there, that would be a triple bottom, and it would be a test of the 11 years breakout. As for the U.S. equities, I think after the move that we saw last week, it's becoming more clear that this correction might be just the beginning, and I wouldn't be surprised if we see a little bit more than that, maybe between 5 to 7% retracement. That is possible. It might be also the earnings season might be the catalyst also for another leg lower. S&P, the most important level to keep an eye on going forward, or at least during this session, would be the 5,500. In addition to that, you have the NASDAQ. You'll have to keep an eye on yesterday's low, at least, which is 19,550. Dow Jones might be a little bit better than those two, but still the 40,600 is the level to keep an eye on going forward in the next few hours. And finally, I would say oil was able to kind of stabilize, recovered a lot of the losses that occurred on Tuesday, and now we're basically almost unchanged on the week. But this is actually still looking much better than at the beginning of this week, and that might give it a little bit more chance for another leg higher. The next resistance remains at the $85-80 barrel. So this is it for this end of the week 10 minutes. I'll see you again most probably next week. Thank you all for watching.